this chapter, we're going to see a couple new accounts that we didn't necessarily see in financial accounting. The first one of those is going to be one that we talked about last chapter, which is the work in process account. That account, you often hear me call it the WIP. This is an inventory account. And just like other inventory accounts that you've seen in the past, it's going to increase with a debit, decrease with a credit. So we're going to see some journal entries in this chapter, and we're going to see that one added in. Additionally, we're going to see an account called factory overhead. Now, factory overhead is kind of a funny account. It's actually a clearing account, and we use it to record and transfer indirect production costs. It's not an asset, not an expense, but it's going to go along the same lines as those. It's going to increase with a debit, decrease with a credit. We'll talk more about factory overhead in a little bit when we get later into the chapter. But for now, the initial parts of this chapter focus on journal entries, and so I wanted you to have those two T accounts available to you so that you can see what those look like. So I'm going to move on. I'm going to go to page 2 in your packet, and we're going to look at some journal entries associated with job order costing. We're going to look today at materials, at labor, and at factory overhead journal entries in general. Okay, so the materials account in the general ledger is a controlling account. A separate account for each type of materials is maintained in a subsidiary materials ledger. The receiving report is prepared when materials that have been ordered are received or inspected. So prepared when materials that were ordered are received or inspected. Basically what they'll do, they'll have that receiving report and the quantity received and the condition of the materials are entered into the report. So when the supplier's invoice is received, it's going to be compared to the receiving report, and if there's no discrepancies, a journal entry is going to be made to record that purchase. What that's going to look like is a debit to materials and a credit to accounts payable. Now, I know in financial accounting, oftentimes, if we didn't know, we kind of went with cash for anytime we had anything going on in relation to costs and such. In this class, we will mostly use accounts payable for that, okay? So when the schedulers order a product, or even when they receive it in the warehouse, it does not place it into production. What will is the materials requisition form. So the summary of materials requisitions is going to be used as the basis for the journal entry recording the materials used for the month. So when materials start being used, what's going to happen is we are going to take the amount of materials and place them into work in process. Remember, work in process is that account. It's an inventory account. It is there for items that have started in the production process, but they're not complete. So when we have some materials going into that, we're going to debit work in process and credit materials. Down below, we're going to look at a couple examples with some actual numbers, okay? First up, on March 5th, 2025, the Materials Department for Cards by Shannon received the following information. They have receiving report number 110 for $3,100, a materials requisition for job 22 of $200, a materials requisition for job 23 of $800, and a receiving report number 111 for $1,000. These are two different things. Remember, the materials or the receiving report has to do with a scenario where we have received the materials. They're not placed into production. The materials requisition is a scenario where they are put into production. So we are going to be doing two journal entries related to this date. So March 5th. First up, we'll do this kind of journal entry where we have received and got the receiving report. Okay, so we're going to debit materials. We've got $3,100 and $1,000. So we're going to debit materials $4,100. We're going to credit accounts payable. Next up, we're going to do the materials requisition. So we had 200 and 800. That's going to look like this journal entry. We're going to debit work in process for $1,000. We're going to credit materials $1,000. I have a similar scenario down below for June 12th. So on June 12th, the materials account has a balance of $350. That's probably going to come into play. Let's go ahead and draw the materials account over here. Our materials and inventory account increases with a debit, decreases with a credit. Okay, beginning balance of $350. So we've got that taken care of. Michael's Camping Supply receives the following: materials requisition for $120, receiving report for $790, receiving report for $900, and another materials requisition for $185. We're going to do the journal entries to record the transactions if the company pays for materials on credit, and then we'll determine the materials balance at the end. So let's start with the journal entries over here, June 12th. We will first look at the receiving report ones. So we had one for $790 and one for $900. We'll debit materials for $1,690, and we'll credit accounts payable $1,690. Then we'll do the materials requisitions. Those are the ones I underline in the squigglies. On those, we're going to debit work in process. That'll be for $305, and we'll credit materials for $305. Now remembering back with what we would do in a T account when we had these different transactions, we debited materials $1690, we credited it $305, ending balance comes out to $1735. I got that by adding on this side, subtracting from this side, getting our ending balance. Next up, labor. Journal entries related to it. We're going to use wages payable a lot and the work in process account a lot with our wages, okay? So when employees work an individual job, they use time tickets to record the amount of time they have worked on a specific job. A summary of the time tickets is used as the basis for the journal entry recording the direct labor for the month. What this is going to look like is a debit to work in process and a credit to wages payable. Remember these wages payable and these wages, this is for scenarios with direct expenses, touch labor, okay? So on March 6th, 2025, the time tickets of employees at Cards by Shannon gave the following information. We got 10 hours for job 22, let's underline that, 12 hours for job 23, 4 hours for job 24. Employees are paid an hourly rate of $10. Journal entry for this, we've got 10 plus 12 plus 4, it's going to be 26. Doing this for $260. March 6th, we're going to debit work in process, $260. Credit wages payable, $260. Last one, during the month of June, employee time tickets at Michael's Camping Supply provide the following information. 700 hours for job 81, 675 for job 82, 500 hours for job 83. Workers are paid $9 for every hour worked. This is going to come out to $16,875. That's what our journal entry will be for. So, on June 30th, debit work in process, $16,875. Credit wages payable, $16,875. Next up, we're going to look at factory overhead. We've got some journal entries related to this. Factory overhead, remember, all manufacturing costs except for the direct materials and the direct labor. So this is all that indirect stuff, everything else, okay? The journal entry to apply factory overhead is going to be a debit to work in process and a credit to factory overhead. It's going to look a little interesting as we kind of go through. Basically, we're going to see a bunch of different things related to this. Overall, initially, you won't do much with the applying the factory overhead, so that's there, but we're not going to review journal entries related to that on this particular page. What we're going to look at additionally is when it's incurred. So incurred is going to be a scenario where any of these costs happen. Things like indirect materials, indirect labor, all of that. And as a reminder, with our factory overhead, it's a clearing account. So when things are incurred, it's going to increase the account. When it's applied, it'll get applied to the work in process, so it'll eventually go to work in process, and that will decrease this account. So initially, we're just kind of getting used to a few journal entries. Most of these will be reviewed from stuff that we just already looked at. We'll look at when it's incurred. We'll talk about applying it a little bit later in this chapter. Okay? So, overall, Grayson Company is a manufacturer that uses job order costing system. Following data summarize the operations related to production in January, which is the first month of operations. Again, most of these transactions are just going to be a review of the ones we just did. First up, we're purchasing 400 units of materials at $14 per unit on account. Well, we've already done this part. We're going to debit materials. And this is going to come out to 400 times 14, 600. This will be 5,600. And we'll credit accounts payable, 5,600. Next up will be a scenario where we requisitioned materials for production. So we have 200 units of job 101 at 12 per unit. That'll be $2,400. We've got 300 units for job 102 at 14 per unit. That'll come out to 4,200. Of these combined, 6,600. When we do this, we'll debit work in process, 6,600. Credit materials, 6,600. Next up, direct labor costs. So just like the previous page, we accumulated direct labor costs as follows: 700 hours at 16 per hour. It's going to come out to 11,200. 600 hours at $12 per hour is going to come out to 7,200. In total, this comes out to 18,400. We'll debit work in process. This will be 18,400. We'll credit wages payable, 18,400. Now the last one. We're incurring factory overhead costs. So again, remember, factory overhead, decrease, incur, allocate. Okay, so when we incur any factory overhead costs, it's going to increase the factory overhead account. Okay, everything else is going to basically be credited. So in this scenario, we have indirect materials of 800, indirect labor 3,400, utilities costs 1,600, factory depreciation of 2,500. This is all going to debit the factory overhead account. We'll add them up. We'll figure out what that debit is. We will credit materials just like if it was going into the work in process account, but now it's just going to the factory overhead account because it's indirect. Materials will be credited 800. Wages payable will be our labor. That credit is 3,400. Utilities payable is next. That amount is 1,600, and accumulated depreciation is next. $2,500. All of this will increase our factory overhead account. That amount will be $8,300. And again, the journal entry we wrote at the top with the allocation of the factory overhead, we will do, and we'll look at that a little bit later. The main thing to know with that is that we're going to have some rates that we'll do that with, and we'll work on those ones.